It's about that time of day again. My name is Joseph. Tuesday evening, November 27th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan this evening is to identify the best locations to look for my favorite entry patterns tomorrow morning in our trade room. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish and trying to complete a pendulum target all the way up at $53 a barrel. And I've got my eyes on a key level of resistance to avoid and a key level of support to use for Wednesday's session. The S&P is bullish as well, but it's at the high of a large channel. Large channels tell me there's potential to call a top on this market, and that tells me first to sit on hands and wait for a key indicator to give me the signal to sell back down to those lows. The Nasdaq is also bullish, but also trading at the high of its range tonight. And that tells me to look for opportunities to sell. But before I call that top of the Nasdaq, I'm waiting for a couple key components to line up tomorrow morning. Over on gold, gold is bearish, and I'm looking to sell retracements after a strong move lower. But a key support level is keeping me on the sidelines, and I'm waiting for a pullback to sell back down again. And last but not least, on the euro is bearish, and I'm looking for ways to sell off the high of a hidden channel tomorrow morning. I've got my eyes on a buyer failure pattern up around the highs of that channel. Boy, we are back in the action tonight. Finished up today's session with a handful of strong moves. Anytime I see a strong move on the chart, I always know there's potential for another big leg or a potential big reversal. We're talking about calling tops, calling bottoms, and of course, continuations on tonight's newsletter. As always, I've got a great video in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for Wednesday's session. But before we jump into those charts, I need to remind you, please make sure you never miss a video by joining our mailing list. You can use the opt-in form right on the homepage of our blog at Sideways Markets. Also, if you're not joining me tomorrow in the trade room, don't forget we trade this strategy every morning in our trade room. If you're not with me tomorrow, the best option is to grab those charts. All the charts from tonight's video. There's a big button right below the video tonight. You can download all those charts. That way, if you're not with me tomorrow in the trade room, at least you have the charts to work with. And don't forget, if you have any questions about anything covered in this video tonight, please remember you can post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing. And when you do, hit that bell icon so you get notified every time I post another video. Now, as always, it's great to be here with you guys and gals this evening, but let's not waste any more valuable time getting ready for tomorrow's trading session. Let's jump in and take a look at the calendar for tomorrow morning. Tomorrow's Wednesday, November 28th, last few days of the month. Don't forget, as we go into the last few days of the month, last day of the month, of course, is on Friday. As we go into the end of the month, we always expect to see a little bit more volatility. We definitely get a taste of that in today's trading session. On top of that, tomorrow, we have pretty much all the news coming in, right? Tomorrow, Thursday, and then into Friday. Now, talking about tomorrow first, the big headline news tomorrow is that GDP and international trade at 8:30 Eastern Time. That's going to definitely get this party started bright and early. Then, of course, we have our new home sales number at 10 a.m. Pay attention, guys, because anytime we have major news around that big round number of 10 o'clock Eastern Time, we always want to pay attention. So new home sales tomorrow at 10 a.m. Eastern Time. And then don't forget, if you're an oil trader, tomorrow is a Wednesday, which means our cutoff is 10 a.m. Eastern Time on Wednesday. This, of course, just applies to crude oil trading. Right after 10 o'clock Eastern Time, it usually gets a little bit too slippery and sloppy for my liking. So trading oil, I would recommend get to those oil markets tomorrow before 10 o'clock Eastern Time. And although you won't see this on the global calendar, tomorrow we've got our Fed Chairman Jerome Powell speaking in New York at 12 o'clock Eastern time, and he's been talking about economic framework. You know, I always pay most attention whenever we have Fed speakers, testifying in front of Congress. But this speech tomorrow at 12 o'clock has really got a lot of people watching. I've heard a number of people mention that already this week. So tomorrow morning, again, it's not really a published, as you can see, it's not on this calendar, but if you dig into a couple other calendars, I've seen people are listing that tomorrow. I've got it listed at 12 o'clock Eastern time tomorrow. We'll hear from our chairperson, Powell, tomorrow morning. And again, it's nothing. He's not going to Capitol Hill. He's going to be in New York City at I believe it's the Econ Club of New York. But I've heard a lot of people mentioning this so far this week. So I'm going to definitely keep my eyes open on that tomorrow. What you want to be aware of for that, though, is with that 12 o'clock Eastern time kind of announcement tomorrow, or speech tomorrow, it's not really much of an announcement, is we may start seeing these markets start to calm down a little bit earlier. Right? We'll normally trade till 11 o'clock, 11:15, 11:30. With Powell on the microphone at 12 o'clock, we may see a bit of an early lunch, right? So 10:45, 11, instead of course, 11:15, 11:30. So just keep your eyes open on that tomorrow. Obviously, we're going to play this by ear. We open up our trade room tomorrow morning at 8 o'clock Eastern time. I look forward to seeing you there with me. We get the GDP international trade at 8:30, new home sales at 10 o'clock. We've got that petroleum status report at 10:30. Remember, oil, 10 o'clock, your cutoff tomorrow. And then, of course, we've got that, that speech, right? That whatever you want to call it tomorrow, Jerome Powell, around 12 o'clock. We'll probably start hearing more about that tomorrow morning on the news headlines. And I would expect that's probably going to mean an early lunch for us tomorrow in the trade room. As always, my plan tonight, speaking of trade room, my plan tonight is to get these charts all set up, identify the best locations, so we can then use these locations to combine with our favorite entry patterns tomorrow morning in the trade room. And again, if you're not going to be with us tomorrow in the trade room, make sure you grab all the charts. They're linked up below the video tonight on the blog. There's a big button down there, right, to download all those charts. And remember, you're always welcome to come out and join me every morning in our trade room as we execute this strategy together. All right, let's jump right in. We got crude oil, S&P, Nasdaq, gold, and we'll wrap up tonight on the mighty euro. Crude is bullish with a strong spike to finish today's session. And although I don't want to buy into this range high, the strength of this bull run tells me to expect at least one more leg, most likely trying to finish off that big pendulum swing target waiting overhead. We have that trading range. You can see on the chart the amount of the move below the range, the amount of the move above the range. So I'm keeping my eyes on that pendulum swing up around 53 for a long-term target tomorrow morning. Now, I'd like to buy the low of this range. I mean, that would be the ideal, right? We want to buy the low of a trading range using that one try, two try failure pattern. But let's be honest, this is a real strong move higher. And without getting too aggressive, just buying into that high, another option may be a move through and then buying the pullback, right, once we get there. So I'm going to keep my eyes open, right, for really two scenarios here right now. If we pull back, it's the one try, two try off of that low. But if we keep going here, right, now we know kind of where they're trying to go, and we'll look for that pullback, right, to buy as we go, right, as we go low or as we go higher. So those are the two main scenarios that we're considering here. And, really the two big components right now are, one, the trading range. Right? The fact that there's a range on here always tells us, right, to look for that 1-2 failure, right? That 1-2 failure, that 1-2 failure. Yeah, as you can see, right, that 1-2 failure. I call this the two-try failure pattern. We'll let those bears try once, let those bears try twice, right? And then we'll look for that buy going right back up into that trading range. Don't forget, also a range reminds us to stay out of that middle, right? So really try to stay patient, one try, two try, and then we'll look for that buy going back up off the low of that range. At the same time, what does the play look like if we go higher here? If we go higher, what I'd love to see here is a little tiny spike in channel. That's probably what will happen here if we see this price continue to go higher here. And basically what I'm looking for at that point, I'd like to hopefully we get a little channel up here. If we can get that channel, then we can do is keep our eyes on those prior swings and then look for traps, right? Little trap pattern, right, to buy off of that low. So there's a couple different options here. Again, if we go higher here, I'm going to want to make sure we really get that moving average up above that range, get that strong continuation, right? You'll notice that's not enough to just look good up to the high, right? A lot of times this market looks good going up to the high. We've got to see it clear through that high, really get through that high. If we can get through that high, then we'll look for, right, like I said before, right, look for some traps, look for that little shallow pullback, get below a couple of those prior swings, and again, I got my eyes on that pendulum swing up at 53. If we don't get that, then of course we can look for that one try, two try, and failure back down. Now, I know what you're thinking. Could we sell this market right now? Could we sell it? Well, you know, guys, anytime we have a real strong move in one direction, I'm always a little bit scared, obviously, of selling into a strong move, right? Because that momentum is the most important piece of the puzzle, and that momentum is what I always want to go with. So what does it take to kind of call a top, right? What does it take to try to call a top? It all has to do with how the market reacts to the moving average. And I want to really kind of grab your attention back here, because what you really want to do is, for example, look back left here. Market makes a run, right? Market's bullish. Let's go back a little bit here. There we go, right? Nice strong bull market up. The buyers try to buy it, but then watch what happens. We create some separation off the moving average, right? Notice how I draw this, right? How it separates off that moving average. Right, okay? That's the setup. When we separate away from that moving average, now it's giving that momentum back now to the bears. Now at this point though, the problem is you can't sell right there, right? You're not going to sell that, because if you sell that, you're selling low. So now what do we want to do? We want to look for some way to sell high. And the best way to sell high is with a trap. So once we see that separation going lower, don't sell down here, right? Wait for that trap, and that's where you want to sell it, right? So I'm glad we saw an example of that earlier. Most important thing right now is, and I know we're always going to see some freaks of nature that will do this, right? We called that top this morning, the trade room. That was a pretty easy one this morning, right? But you know, there's always going to be those times where the market goes straight up, straight back down, straight down, straight back up. And you really can't do much about that. But right now, if you want to call a top on this, it's going to be it's a strong move up. So now what I need to see is, I need to see us now get some separation here, right? Get some separation away from that moving average, right? Get some separation away from that moving average, then look for that trap high, and we can go from there, right? Find that trap. That's the only way I'm going to feel comfortable selling, right, into such a bull, right, into such a bull run, right? And of course, if we miss it, or if we don't get it, right, if we get it like this, right, straight up, straight back down, if we don't get that, again, very different, right? This was not a very strong move higher here today. This is a razor sharp move, right? These are two very different environments. Feel a whole lot more comfortable selling that move than selling this move, right? Hopefully you too. So again, want to see us pull back to that moving average, create some separation now, and then get us a trap that we can sell that trap right back down into that range, right? Create some separation and then trap high, right? So picking tops and bottoms, you really don't pick tops and bottoms, right? What we do is we wait for that separation first. That gets the momentum on the right side, and then we look for the entry, right? We'll look for the entry second. So really right now, it's going to be that one try, two try, buyer, right? Buy into that seller failure, that two try failure. Or maybe we get that push up into that. I would imagine at this point it'll be some sort of spike and channel up here. If that's the case, we're looking for a trap low, right? Trap pattern there. And then how we call a top on this? Get some separation, right? Get some separation, and then it's going to be that trap high, right, as we go, right? Using that moving average separation, right, and then trap high and sell back down. Now, again, these are the basic ideas for tomorrow morning. We're going to execute this plan no matter what we get. We'll get one of these tomorrow morning, and I hope to see you there with me in the trade room. If you're not with me in the trade room tomorrow and you still want to learn all the great entry patterns, right, the two-try failures, trap patterns, spike in channels, trading ranges, I want to give you a lot more details about this strategy. I'll also send you hundreds of examples of this as part of our free trading course. You'll notice a little pop-up here in the upper right-hand corner. I'll also put a big red button right below the video tonight on the blog here at Sideways Markets. If you're not with me tomorrow morning in the trade room, but you still want to learn all my favorite patterns and the basics of this three-step trading strategy, make sure you grab that free trading course. You will definitely not be disappointed. Now, let's keep moving. Got a lot more to cover here tonight. Over to the S&P. Right, S&P is bullish at the high of a range and the high of a channel. That tells me it's too high to buy right now, but it's too bullish to sell. So we're kind of stuck here, aren't we? So I'm looking for an opportunity to kind of quote unquote call the top, right? I'm looking for an opportunity here to sell off these highs. But first, I need the momentum to change hands for me. So I'm watching for that moving average, create some separation, and then I'll look for a bull trap to sell back down again. We just talked about this, right? Just talked about this. An example of this would be right back here again, right? We see a strong move up. They pull back, get some separation away from that moving average, and then bingo, right? You can see bears coming in and selling it right back down again. So we are looking for something similar to that right now if we want to sell off these highs. But I'll tell you, this S&P is a little bit tricky because you can definitely see, right? You can definitely see there's what appears to be a bull channel here. But there's one big giveaway, and that is this one right there. That high and that high right there. That's a range. And as I've said many times on this newsletter, whenever you have to choose between a range and a channel, right, it's always the range. It's always the range. The range is the most important factor. So knowing that that's the trading range, I can take that trading range, I can copy and paste it down, create support. Yeah, that's not much support right there. Yes, it is, right? I'm being sarcastic, obviously. Lots of support there, right? Copy and paste it up, and that creates resistance. By the way, I call these range expansions. We talk about these quite a bit in our trade room, right? So take the trading range, copy and paste it up, and look where we are. We're right up at that high. Okay, you could also say, too, there's a measured move here, right? That's level of resistance. And again, you know, I definitely think there's going to be some channel people here, right, who would say we're right near the highs of that channel as well. So we're definitely have the bullish tone to it, right? It's definitely got a bull tone to it. We've got one try for the bulls, two try for the bulls, and we're right there up into resistance. And like I mentioned on oil, right, that bullish momentum tells me I really don't want to sell this market, at least not yet. I have to wait for a better opportunity. And in all reality, I mean, in all reality, hopefully this market collapses back down so we can buy it again, right? We talked about this last night in the newsletter, right? Our goal today was to buy nice and low. I'm really looking for the buys down at the low of that range, right? Anytime we see a trading range, we want to buy low, we want to sell high, right? Buy low, sell high. So I'm trying to sell high off the top and buy low off the bottom. Okay, now buying low off the bottom's pretty easy. It's just a two-try rule, right? One try, two try, back up, right? One try, two try, back up. Now, it's easy for me, but I will definitely admit, right, there are some nuances to the two-try rule, right? There's the shallow two-try. There is the nested two-try, right? There's a bunch of different variations, right, of this two-try failure pattern. Again, as I mentioned earlier, I've got that free trading course for you in the upper right-hand corner. Grab that little information icon up there and you'll see that free course linked up. It's also linked up below the video tonight on our blog. So buying off the low is relatively easy. We're looking for that same basic two-try failure pattern. Selling off the high is what takes a little bit of, well, what's the word, right? A word my dad would use, right? Finesse, right? Finesse. I bet you haven't heard that word out of my mouth before. Let's see here. What type of finesse do we need here? I feel kind of goofy even saying the word, to be honest with you. The bottom line, yeah, right. Me and the word finesse, right? They don't go on the same sentence. The bottom line is that I want to see some separation, right? So think about that. I think that's that example we saw earlier. I want to see us now with some separation. We're expecting to see these bulls try. Let's get away from the moving average, right? Get that separation, then look for that trap high, and then I'm going to feel a whole lot more comfortable, right, selling as we go. Because then I'm selling high, right? And again, what you're doing is you're anticipating that buyers are going to come in down here. Remember, we rarely, it does happen, but rarely do we see a market go straight up and then straight back down, right? Again, it does happen. We saw one on oil today. But, again, most of the time, though, when we go strong move up, you're going to have to give these guys one try, two try, and then we can sell back down, right? Let those buyers try once. Let those buyers try twice. Again, my favorite way to do it is when I see that strong move up, let them try once, let them try twice, and then if we can get that trap, right? Get that trap. Those traps are money, baby. They are money, right? Almost a bulletproof sell. And again, you can see a good example of those, right, off that previous example that we saw earlier on. Now, another thing you want to keep in mind out here for tomorrow is, what if we keep going? What is the plan then? We know what we're going to do if it drops. We know if it gives back down here. What's the plan if it keeps going? If it keeps going here today, it'll probably be some sort of narrower channel, right? So we'll keep our eyes on this. If it keeps going, I'm not going to get too aggressive here, right? But if we end up pushing, right? If we end up really pushing higher here through the top of that smaller channel, this could easily be a big rally higher here. Who knows? If we do get that tomorrow, right, then of course we're going to mark up those prior swings, and we'll look for these buys off the low of this, right, of this new channel here. Right, and we'll look for those same two-try failures, trap patterns, pullback patterns, right, et cetera, et cetera. And if you want more details on all the entry patterns that we'll use around the lows of that channel, just make sure you grab that free trading course, right? It'll definitely help you along your way. And then, of course, you're ready for me as a client in our trade room. So if we do keep pushing high, we're going to plan there. If we collapse back down, that covers it. We're good bullish, we're good bearish, and we're good if we collapse back into that range. Let's keep going. Next up now, over to the Nasdaq. Well, I'll tell you, the Nasdaq looks ripe for a tumble. It really does. The S&P has a little bit more momentum than Nasdaq. Nasdaq is bullish, but I love to see this gap up. Right, little gap up there between. It'll probably close there, not too long from now. But big gap up, right, from the close to the open in Asia. Big bull run, right, gapping up above the high of that range, and of course up to the high of this channel and into that measured move. Same scenario we found ourselves kind of on the S&P. We're bullish, right, but we're way too high to buy right now. I want to sell. I want to sell the high of a range. I want to sell, right, this. I want to sell these highs, these channels here. The only problem is that we have that momentum. And again, we keep seeing this pattern, right, pop up again. Strong move up, right? Let those get that separation away from that moving average, right, and then grab that trap. Right, grab that trap and sell it back down. We keep seeing that same pattern over and over again, right? Get that separation away from the moving average, right? And then watch that trap, right, for that sell back down again. So again, how do we call a top? How do you predict a top? We don't. We're not looking to predict a top. What we do is we understand that there's potential for a top, but first we have to let those buyers try once. let them try twice, really make sure we get that separation away from that moving average, right? And then get that, right, get that sell at resistance. That way the buyers are all roped in, they're trapped in, and we can just sell, right, let this thing collapse back down into that range. The problem is you don't want to get too aggressive because buyers will still try to buy, right? Buyers will keep trying to buy any shallow pullback. So that's the plan. Nothing really different there on the Nasdaq than the S&P. Very similar plan, right, for the sell off of that high. And then of course, as we go lower here, it's kind of the same situation, right? As we go lower here, hopefully we get that 1, 2, and back down again. If we can get back down to the low, then it's a 1 try, it's a 2 try, it's a failure. You know, sometimes these moves, they really go strong, and then you're looking for what I call the nested 2 try, 1, 2, and go, right? Or maybe it kind of stumbles its way lower here, and we get the, we saw earlier, right? That 1, 2, and go. A little shallow, right? A little shallow, 1, 2, and then you're buying. Basically, what you're doing is you're waiting for those sellers to try once, right? Letting them pull back, right? Let them try again. And then once we know we have the sellers trying twice, then we can buy right into those stops, right? I love the 2 try rule. The 2 try failure pattern has so many applications in range markets, in trending markets, calling reversals or tops and bottoms, right? As we've called it here today. So those are some opportunities tomorrow to use that 2 try failure pattern. And again, I'll remind you, if you want to learn more about these entry patterns, right, grab that free trading course. It's right in the information icon there in the upper right hand corner, or it's below the video tonight on our blog. And again, all I'm doing right now is we're kind of planning ahead of time where we're looking for the sell off the high, what we're looking for tomorrow off of the low. We want to stay away from that middle. What if price keeps going higher? Right? If price keeps going higher here, fine. We'll look for a new channel. We've really got to get a lot of good punch, right, as it goes higher. You know what I mean? I'm not going to try to buy this one, right? That's a little bit too aggressive. But if we can see it really punch higher here, absolutely. Let's definitely consider that to be a bull breakout, right? And we can look for that move, right? Start buying off the low of that channel. You know me, I always want to go with the momentum, right? Unless of course I'm looking to buy into the high of the range here. But if we can see this market continue to push on strength, we'll definitely be wise to look for a new channel, right? And try to find those buys, right, off the low of that channel. And again, usually don't forget, when we get to the low of a bull channel, we oftentimes end up seeing seller failure patterns, trap patterns. And again, we'll talk more about that tomorrow morning in the trade room, or you can join that free trading course and learn more about those patterns we're looking for right here as well. All right, Nasdaq looks pretty good here. Again, very similar than the S&P here. Now, how about the gold? Gold's a little bit of a curveball here. Quite a bit going on here on gold right now. First of all, we're definitely bearish. There's no question about that. Get a strong spike lower this afternoon. And of course, my plan is to look for selling opportunities using resistance levels anytime we have a bear momentum. And of course, one of the key levels of resistance that I'm watching here, if we can kind of zoom in a little bit closer on this, some key levels here, if I connect those lows up to those highs, that's really a very attractive, right, channel high. If you were to put this midline on there, something tells me that midline would look beautiful as well. So I like that channel. I'd love to sell off the high of that channel. And you'll also notice too, I've marked up that reversal line at 1220, and I've marked up that prior swing at 18.2. So those are resistance areas as well. So you can see here, you combine those together and you've got a great little spot right there, right, to be a seller. Now, if we can get that short off the high, right, if we can get that short off the high, where's the target going to be? Well, then we can use this leg down. This is kind of like one of those Elliott wave patterns here where it's 1, 2, 3, 4, 5, right? And what I'll do is I'll take leg 1 and use that as my target for leg 5. Yeah, I know what you're probably thinking right now. You know, sometimes leg 5 is equal to leg 3, but it's really rare. It's really rare. You've really got to have a really a real powerful trend for wave 5 to be equal to wave 3. That's definitely wave 3 though, right? We definitely have a third wave going lower here. So in my experience, you're never going to be 100% accurate. In my experience, the best bang for the buck is to always go for leg 1 equals leg 5. I'm not going to go into too much more detail on it because in my opinion, Elliott is, or Elliott wave, principle or theory, whatever you want to call it. There's a lot of discretion involved to it, so it's really kind of a never-ending rabbit hole, to be honest with you. I use pieces of it in my trading strategy, and we talk about it right in our course materials. But really, just identifying when you see a third leg, because once you see that third leg, you kind of put the piece together. You've got wave 1, wave 2, wave 3 is the personality. As long as we don't clear right inside of wave 1, right, we should see a symmetrical move going lower. So long story short, I'm using that leg and I'm using that as the measured move target. All right. Now, it's also important to remember too, this strong move down, it may go sideways. Right? It may go sideways tomorrow. Let's not forget that either. A lot of times we see strong moves in one direction. It's almost like the market's gone too far, too fast, and it needs to catch up. So if we do end up going sideways down here, we talked about this last night, right, with a trading range. Anytime I see a trading range with a bear bias, what do we look for? We look to sell high. And what pattern do I like to use? I like to use the 1, 2, failure pattern. Now we've talked about the 2 try failures on the opposite side a bunch already tonight, right? I'm looking for the 1 try, the 2 try, the buyers try twice. And then once we start seeing those buyers try once, try twice, then we can start looking for that sell going back down into that range. And again, there are lots of variations, right, of this 2 try pattern. I'm not going to go over all of them here tonight. Just kind of keep the video as short as I can. We're already a bunch of time to do it right now. But if you want to see more examples though of that 2 try failure pattern, don't forget that free course is right there in the upper right hand corner or linked up below the video tonight on our blog. Now, I haven't forgotten about the large range either. Right, I hope you're waiting on that, right? Because there's the range, right? And we talked about this range last night. We were hoping that we'd get a 1 try, 2 try, and then back up in. That wasn't the case, as you can see though, right? That is way too strong right now to buy. It's just such a strong momentum move. But look where it goes, right? If we take that trading range, copy and paste it down, right? That creates support. That support level is looking pretty good there. So I definitely don't want to sell here. I want to be a seller because of that strong momentum. But what would it take for this market to turn directions? Well, we already talked about what it takes to call a top. What would it take to call a bottom, guys? The exact opposite, right? So let's think about that example here, right? We go back to the moving average. Those bears try once, right? We go up, they try twice, get that separation away from the moving average. Yeah, you know what I'm talking about, right? Separation, then it's that trap, right? It's that trap. A lot of times what will happen is it will, let's go back to the chart, be easier here. A lot of times what will happen is, let me zoom in on this a little bit then, is we'll see it kind of jump, right, above the moving average, right? That jump above the moving average, the bears will try once, go up. Now we've got that separation. Watch that, right? Watch that little swing. Watch that trap. Because now what you're doing is now you've got the sellers trying once, the sellers trying twice. You're using a variation of that 2 try failure pattern. You're still giving those sellers, right? You're still giving those bears all the respect that they deserve because you've got this momentum. But now, because you're getting that separation away from that moving average, right? Now we know it's green light to start looking to pick a bottom on this, right? So we're watching this, right? We're definitely watching to see where it goes. Right now, my gut tells me we're going to find one more leg going lower here, right? And I'd really like to incorporate, right, 1 try, two try, right, and then back down in. That will be my ideal, right? Get up, right? Get up. Let those buyers try it. Get that moving average over, right? Let those buyers try twice, right? Once and twice. Then we know where stops are, right? And we can sell right into those stops for that next leg lower, right? That fifth wave, right? As we discussed earlier on that, right? On that gold. But again, we're watching to see if we can get that momentum to turn back for the bulls. If we get that momentum to turn, then looking for those bear traps below prior swings to get that move going higher. Again, tomorrow, 8 o'clock Eastern time, we're going to break this down and do it together with all of our clients tomorrow. So I know I'm covering a lot right now, right? What it will be like for a bull or for a bear, right? Or even for a range, right? If we start going sideways here, double tops, double bottoms. Now it's one try, it's two try, and we're looking for those buyers, 1, 2, and then failure back down. So we're waiting for that, right? That momentum shift away from the moving average for a reversal, calling tops and bottoms, if you will, or waiting to sell into the top of this range for that next leg lower. All right, last but not least here tonight is the euro. The euro is bearish, so I'm looking to sell at resistance levels tomorrow morning, and I have my eye on the top of this bear channel. We may also turn into a range ahead of this big measured move support level down there. And of course, if we do get that, my plan then is to shift to selling the two try failure pattern. Now, it's pretty clear here on the euro, right? We are bearish. There's no question about that. And unlike the other markets we've seen tonight, there's no real ranges to worry about. So we're not really looking for a reversal, to put it that way, right? On the E-minis and on gold, we've got some significant strength moves that we're kind of planning and working around here. This is pretty straightforward here. We have a very bearish market right now. It's just kind of grinding its way lower. You'll notice we're just a few points here away from that measured move. And whenever I see us getting really close to a major level of support, I always want to shift my focus from selling retracements or buying pullbacks if you're long, right, to looking for traps and failures. For example, if you look at this channel, right, I've got this channel. Now, there are better ways to draw this channel. I mean, let's be honest. You could draw that channel like that, and it will fit better. It'll be a better looking channel. The problem is it's not going to make it easy to identify a key level of resistance. I want to sell at resistance. So what I'm doing is I'm looking for what I call a hidden channel. I'm marking up those lows and I'm going, you know what? I'll bet we can use that trend line as kind of like a little hidden level of resistance. So I'm looking for some resistance levels right now, and the top of that channel is definitely one of them. Then another one is prior swings, right? That prior swing trap here, right? Above that prior swing. That's an option. What I really like though is this area right here. There's a few different reasons, but the big reason is because the flat moving average, right? That flat moving averages mean volume. They do. Right? If you were to put one of those fancy, expensive volume profile charts on here, which you don't need, guys, don't waste your money on that. And if you did waste your money on that, like I did many years ago, don't beat yourself up about it too much. It's an easy mistake to make. Those cool-looking software packages, they're very, very cool-looking. I just wish they were as effective as they are interesting to look at. So if you wasted money, I did the same thing. It's not your fault. They make it sound so special, right? You can see inside the candlesticks. You can read all the order flow. And who doesn't want to know what the big banks are doing? Right. It's a great sales pitch. I bought it too when I was a rookie, right? The bottom line, though, is if you want to save a couple $1,000, you don't need to go out and grab all those big expensive volume software, volume profiling, market profiling, auction marketing, whatever new mousetrap name they're selling it for right now. The bottom line is just look for a range, right? You want to find where the volume was, right? You want to find the volume nodes, right? As they say. Again, there are so many books. People tell me all the time they focus on volume profiling, and I'm like, okay, it's just support and resistance. Like, what else do you do? What else do you do? If you want to find where the volume is, look for a flat moving average. And so if you follow volume profiling or auction market theory, whatever you want to call it, you know that we're always trying to go back into those high volume areas, right? Price is exploring outside of value and will come back into value. So that's really where we're looking. A lot of overlapping candlesticks right there. That's a great looking spot. And when I put those together, again, flat moving average, trading range, that's a great level of resistance there as well. I like the fact this channel lines up right with that level of resistance. That looks like a great spot for us to sell. So now all we got to do is get up there, right? Now we got to get up there. And what you kind of want to think about is we saw an example back here, right? We go up, get those buyers to try to buy the pullback. Once they do, just sell right into their stops. Right? It's a really simple pattern. It's one of the many ways we use the 2-try rule. So assume now we go up, moving average comes over, buyers now try to buy the pullback, right? Try to buy the pullback. We know where their stops are, and we can sell into those stops. Now that provides with one sell off the high. There's actually more. If I grab this channel now, I call this a hidden channel pullback. Here's a second pattern we can use as we go lower, right? There's a 2-try failure, right? The 2-try failure, that's 1, that's 2. And then, of course, once we have the 2-try failure, price slams lower. We don't want to sell low. We want to sell high. And we'll do that at resistance, right? I always like to, again, it's 1, it's 2, it's 2-try failure. Mark up that prior swing. And where that swing connects with that channel is really your sweet spot, right there, right? So it's a 2-try failure along with what I call a hidden channel pullback. These are some of the entry patterns that we're looking for. Again, tomorrow morning we open up at 8 o'clock Eastern time, and I hope I'll see you there. If you want to learn more about the entry patterns without being a client of mine, that's what my free course is for. You can grab that free course below the video or grab it in the upper right-hand corner using the information icon. Now, again, like I mentioned earlier, we may also go sideways. If we do go sideways here, right, if we do go sideways, then I'm still going to try to use that trend line, but now it's a slightly different pattern. Now it's the 1-try, it's the 2-try. There's a slightly different variation when we apply the 2-try pattern to a range and a 2-try pattern, right, to just a straight failure. For example, a lot of times with ranges, we get these big breakouts, and then we have to use what's called the nested 2-try, which is the 1, the 2, and then down from there. So it's kind of a variation of that 2-try. But the bottom line, though, is I don't want to give away too much of the secret sauce, but we're looking for that 1, we're looking for that 2, and sell back down again. Right now, what if price keeps going lower here? Right? What if it keeps going lower? You know, this is the only market that really has a clear direction right now. Pardon my laughing, but it's been a crazy day today. So if we keep going lower, right, what's the plan then? If we keep grinding lower, this becomes a spike in channel. And what will probably be is it'll probably be a midline, right, in the middle of that larger channel. So if that's the case, not much changes. We can get aggressive with traps up off that high, right? Aggressive there with traps. We could also look for that buyer failure, right, around that moving average. You know, we've talked about these patterns already here, right? But that's the plan, right? If price keeps grinding lower there, we're still going to look to sell high. We'll look for the 2-try failure. We'll look for traps. We'll just try to get it up above, right, around the high of that channel, right? The key, though, is don't chase it if it goes lower. It will almost always pop higher, right? It'll almost always pop higher and give you a chance to get on the bus, right? You don't want to chase the bus. You chase the bus, you'll be chasing it around the block all day. It's better just to sit tight, wait for the bus. If you miss it, it'll come right back around again, right? Just give it some time. All right, guys, wrapping up here tonight on our nightly newsletter. The goal for tonight is to get our charts ready, our heads ready for Wednesday's session. We get some big news early tomorrow, don't forget. So get out there early. I'll be in the trade room tomorrow at 8 o'clock Eastern time if you want to join us here as a brand new member. Our advanced membership is our most popular Our advanced membership is all inclusive. It includes all of the strategies, right? All the cheat sheets, the checklists, the tools you need, unlimited support, unlimited access to our trade room. It's all inclusive. Check it out. Learn more there on our website. If you need any more information, we have live support. I have a toll-free phone number, pardon my ugly mug, and don't forget, I think, I'm a little bit biased though, I think we're the best free trial in the business. Part of that free trial is an invite, come join my trade room. Part of that free trial is the free trading course. So grab that free trial if you want to learn more. Keep in touch, right? I know you're alone right there at your computer right now, but you're never alone when you're working with me as a client. So get out of here, rest up. We'll see you tomorrow morning, bright and early. If not, we'll see you same time, same place tomorrow night on our next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye.